Check 1 2, check 1 2. We are live. We got some good news and some bad news. First, let's start with the bad news. The bad news is my camera's not fully charged. It's probably going to run out. No, I'm just kidding. The bad news is, okay, let's start with the bad news. The bad news is oil prices are surging. We know that is part of the risk to the market going forward to keep at least the bull market smooth, right? That's just a risk to keep the bull market smooth. But the good news is CPI came out lower. It continues to make progress, and I think we continue. So now the market is breaking out all-time highs. I'm just kidding. We're breaking out a 52-week high. Excuse my bad. I got something in my mouth. We're breaking out to 52-week highs. All right, 52-week highs. So either way, okay, good news is CPI continues to decelerate. We will get into the details on that CPI report so that you can process for your trading, for your investing, exactly what's going on here, right? Exactly what is CPI looking like? What is inflation looking like? Because the picture continues to look better. We said, hey, I think we're going to get a better than expected inflation report, and I think the market's going to break out, and I think we head into wave 2 FOMO, and that's exactly what we're starting to see, right? The negative, like I said, is we got one macro force really pushing the dial to the negative side, which is oil prices surging higher. And if that continues, then we're going to get a flat inflation report on the next one. If it breaks out, we're in trouble. So we're going to go over that. If you want to, we are live charts on YouTube. We are live charts on YouTube. I'm not even going to say that anymore. I'm going to try to say Bluetooth. If you hear me say that, that is to help us with the algorithm on TikTok, because they are getting rid of people for trying to transition because their platform sucks for monetization. So anyways, getting back to it, right? We'll take a look at the CPI report, and man, the market looks good. Let's just, you know what? Let's peek. Let's first take a little peek. By the way, good morning to you guys. Good morning, Ace, Fibonacci Poppy. Good morning, Asan, Jamali. Good morning, Football Legends. Good morning, Bliss. I see you guys out there. Good morning to all you guys in the chat. Appreciate you guys supporting. Wouldn't be here without you, like I said before. Let me give you that shout out. Ooh, that's kind of loud. So we're still waiting for that stream deck to come through. Anyways, let's jump into the content here. Okay, let's jump into the content. Let me get that music back on. We're gonna keep that music in the background. Tell me if it gets too loud where it blocks off, you know, the clarity of my speech. But yeah, good morning to you guys. Yeah, we're at 3% year over year. Like I said, we'll dive deep into this actual having a great morning. Yeah, you guys are probably up on SPY, huh? Up big on SPY, S&P 500. We are on Bluetooth. If you want to check us out over here, if you want to see the charts, okay? All right, so this is basically our inflation data. Now, keep in mind, before we even get to the U.S. inflation report, all right, let's take a look at Europe, right? We're seeing progress in Europe. Who is this? This is Spain, right? Spain inflation 1.9%. Inflation is coming down quicker than people expected. It's at 0.6 here. This was just today, so I'm showing it. Okay, we have Turkey inflation negative. Not that Turkey's a big factor, but the whole narrative that inflation is so sticky and it's coming up, it's not happening. Inflation is coming down. Now, if we turn over here, we actually did tick up over in India. I'm sorry, no, this is industrial production. That's not inflation. That's actually a good thing. So yeah, let's go to the US inflation report, right? So we are making that transition lower. This was the big base effect though. It is June. The highest inflation report last month was June. So this is the base effect, meaning this probably is the biggest drop that we see year over year. It doesn't mean we tick back up. It just means the tailwind of just the base effect tailwind is pretty much over. So year over year, we're at 3%. Who would have thought by the end of summer? Did we not call this? We said by the end of the summer, we might see 2% inflation. So the end of the summer will be next month. That will be the July print, right? By July or August. And we're at 3%. We almost hit 2.9, pretty close, okay? Now let's go core. Core is now below Fed funds rate. Core is at 5.3. Hold on, let me make this a little clear here on YouTube. There we go. So core is the big thing that the Fed is worried about. Right now we're at we're at 4.8% on core. So core with a lot of progress there. And you know what? That was better than expected. I think what is expected at, oh, I guess they were expecting 5. Yeah, they were expecting 5 flat. So now core inflation is below the Fed's funds rate in restrictive territory. Boy, AMD is absolutely exploding right now on this report. Going back to retest, nice entry. I just see so many setups right now, but we're going to get to the market. Okay, let's just digest this inflation report, go over the macro, because that's what we do first. All right. So that when we head into the market, we kind of have some context into what we're looking at. What is it responding to? So it is responding to a very good headline inflation year-over-year report. Core inflation, I don't want to say it's extremely good, but it's pretty good. We're at 4.8%. It's making progress. It is coming down. And keep in mind that the most of core, a lot of the inflation, 40% of it is shelter. Shelter is starting to roll, right? It is starting to roll over. It is a little laggy. Now let's go into the month over month, okay? Month on month, we were at 0.2. The market was expecting 0.2, so right on target, 0.2 to 0.3. If we annualize that, right? If we annualize that, that is 2.4, 2.5 inflation. That's 2.5% inflation. We are at the Fed's target in a lot of different components when it comes to inflation. We are at the target. All right, now we go to core. Same thing, 0.2. Big drop, by the way. That was the biggest drop since what, April? Wow, big. Look at this. Look at this chart. Let me zoom in here. Come, dude, let's go. Apple, zoom in. There we go. All right, so look at this chart. We basically wedged. Oh, we should break out. This is not a trade, but we should break out. Broke down, right? Core, month over month, is collapsing. I think we go negative. And this is the upside surprise I talked about in the newsletter. If you're not signed up, sign up to the newsletter so you can get the insight, the best market insight on the whole market. Now I'm just playing. It's not the best insight, but it definitely is. It's not professional research, but I'm taking all the research that I've seen and I'm adding it together. So far, we've been right. We said, hey, it's, wave 2 FOMO. Inflation comes out better than expected. And so far, we are seeing that. And really, that core month over month is giving us a very clear view that the market's headed for all-time highs, because core is the issue. The month-on-month coincident data is telling us what? The month-on-month coincident data is telling us that we are basically at the Fed's target if we annualize the 0.2. Okay, that's great news. Core year over year still a little sticky, but it doesn't matter if it's a little sticky. Okay, so we're seeing a lot of progress there. Now let's go to the negatives. Let's go ahead and jump to the charts. All right, let's jump to the charts. Let's see. Oh, here we go. NASDAQ's trying to gap above that level. So the NASDAQ has a little bit of room to run. Now here's the downside. Here's the downside, okay? This is, actually, let's get back into our, there we go. Now we're into the charts. So the downside here is that oil prices are surging. We're at the top of the trend, right? And just keep in mind, if oil moves any higher from here, all right? As in we get above the 75 level and hold, well, that's going to put pressure on the next inflation report, meaning we don't drop as fast. We still drop to the 2 percentiles, right? We're going to get into the 2% year over year, but we may not collapse the way, it's just not as bullish. Now, if we get up to 85, right? If we get up to this level, well, we might be in trouble there. We might be in trouble. If we get 100, we're definitely in trouble, okay? Here's the good part. As we look at these macro headwinds or tailwinds, the dollar is collapsing. What did we just call out? What did we just say the other day? We said the dollar is at risk for collapsing because the risks are coming off the table, right? Big collapse in the dollar. This is a huge risk on signal. I expect, like I said before, Bitcoin to start exploding if we get above this level. Bitcoin, Ethereum, I'm a favorite of Chainlink. Okay, we already seen the market start to move there. So the dollar's throwing up right now. Dollar is barfing. That's good news. 10-year yields barfing, right? Couldn't get above that level. We said, hey, we might be peaking out here. 10-year yields had a big run up beforehand because the labor market report was so strong. Okay, the labor market report was strong, so we saw 10-year yields front run headline CPI. But guess what? Came in better than expected, a lot better than expected in some areas, and now those yields are coming down. The cost of capital is coming down. It's just it just comes down to, where's oil going to land, right? Now we have the VIX. The VIX finally starting to move that, make that move lower. So the VIX is moving lower. Bond, NASDAQ volatility gap lower. Bond volatility coming down. Triple B spreads, which is credit risk, coming down still, right? That's important. Credit risk. So our macro forces are pointing to a bull market continuation. It's pointing to new highs. We're definitely pointing to new highs. Okay. Now let's dive a little deeper into that actual report. Where is my picture at? I'll pull that up in a second. Let's pull up. We'll actually just look into the technicals first. Let's look in the technicals of the market, because we're going to dive deeper into the actual report and see like what are the micro details. So here we got S&P 500. S&P 500 cup and handle, basic cup and handle pattern. As a matter of fact, let's put this on the 4-hour chart. Okay, you guys can see it. Cup and handle, breaking out of that cup and handle, very bullish sign, just gapped up. Wave 2 FOMO, we've been calling it for weeks. Check out the newsletter. Wave 2 FOMO. Now we're looking for the Qs. Will the Qs show some wave 2 FOMO? Are we going to get the wave 2 FOMO in the Qs? I think so. All right, I think so. Dow starting to cup and handle or double bottom here, and it's breaking. It's trying to break. Now, keep in mind, this is the inflation report, but we also have PPI tomorrow, right? So I don't think the market makes its full move until Monday, right? Maybe Friday we get a big move to the upside from this. It depends on the bank earnings. Is there anything looming that we have not factored in yet? But for the most part, this is a very good inflation report. IWM broke out, right? Above resistance, pulling back. ARK broke out, pulling back. So a lot of names breaking out here. Look at Apple with the perfect setup. This is the 4-hour chart, and look at Apple setting up this very beautiful bull flag, right? Apple with the bull flag. So that'll be nice once we hold that level, a bull flag goes higher. Google, giant bull flag. Okay, there you go. There's the bull flag on Google, right? We're seeing that there too. How you guys doing this morning? What up? NAIO, yeah, NAIO is breaking out for sure. Let's see. The one thing not ripping is Amazon. Guess which I picked? Amazon. If I had the thing, I would hit it on you, bro. It's always like that. But Amazon's set to move higher. Amazon is set to move up. Okay. Just checking out these big tech movers. Now, tech is looking good. No, Amazon's set. Amazon's actually, this is really good for Amazon because they have a lot of AI stuff, Amazon AWS in the pipeline. I think their earnings will be pretty good. Okay. Meta, and Meta's breaking out. Okay. Meta is starting to break out. Now, of course, the baby Tesla, right? Tesla, very nice trend. I actually have this charted up on our other charts. So we'll take a look at those charts. I think it's a lot better. Tesla setting up. Look at this opportunity with inflation coming down so fast, right? With inflation collapsing to some degree. Oh, I can't see your faces. I don't know why it's printing out that way. Slime Z, what up? Good morning, Manny. If a lot of the big names haven't moved yet, this is a perfect setup. You have the narrative. Inflation is collapsing, right? There's a pullback, shaking out all those those weak hands. Nvidia starting to move up. AMD starting to break that trend that we drew yesterday. Okay. Who else do we got? Open Door almost at $5. Dang, it gapped up to $4.75. ZM, still watching that ZM from yesterday that we had talked about, got rejected at that level. That is the level. We got to get above 72 and hold. Okay, for Zoom. Teladoc, wow. Teladoc with those gigantic, really good options, but I think it's going to come down to earnings for Teladoc because they've had very bad earnings. MicroStrategy just squeezing the shorts. Really wishing I would have got in on that pullback when we broke out, but I got scared. But they are squeezing the shorts. I believe Palantir is nearing 17. Maybe it'll consolidate a little more. I doubt it. It's just too strong. This market is strong. All right. Now let's flip over to the actual charts and sort of actually, you know what I want to look at? See if I can pull it up in here. CVNA high short. Yeah, they're still getting I'm in that leap. Nice. How's Netflix doing? Oh yeah, I didn't even look at Netflix. NIO is ripping, Netflix is ripping. We have a lot of stuff ripping. So we can chart the technicals. Let me see. Netflix is wedging. Netflix is wedging. I want to jump over to the other charts. So you guys are having a great morning. That's good to hear you. Good to hear you guys. All right. There's a lot of stuff in the pipeline. There's probably a lot of people that are pissed off. They're gonna have to cover. They're gonna have to cover pretty soon, right? And we called this. We said, hey, inflation comes out better than expected. Wave 2 FOMO. Now the wave 2 FOMO is just getting started, right? This is wave 1 of wave 6 of wave 2 FOMO. No, I'm just kidding. It's phase 1, which is damn it, the narrative is not in my favor. Phase 2 is no, it's not that good of a report. Let's wait for PPI, comes out better than expected. Phase 2. Phase 3 is, oh my gosh, earnings are revised up. Inflation is doing better than expected. My last chance is that oil moves up. And then phase 3, it's over. Phase 3 FOMO, I think, starts next week. I think it starts next week. All right. Let's check out these other. Bespoke had a lot of good data, man. There's just so many good things that we see here, right? I wonder if I can find the actual inflation here. This guy had a really good analysis, but we're not going to jump onto that next. I want to look at some of these plays that are starting to set up. Look at S&P. Where's the next resistance for S&P? So let's jump into that. Those charts. All right. Here we go. S&P 500. I should have moved myself on this side. All right. S&P 500 on the right-hand side. On the left-hand side, we have ARK Invest. ARK starting to break out. Okay. Let me move this camera down. Hey, my camera might go out too because I didn't fully charge it. Forgot. But advanced decline got to 2,000, 2.25, right? 2,250 stocks for the first time in about 2 weeks. I don't even know how last time we saw that. All right, the Dow exploding. Absolutely, we already said that. Dow on the left, DIA. Okay. Dow making a move higher. It still has some resistance. We still need to get up, a little higher in the Dow. SPY. This on the left-hand side. This is without the pre-market highs, without the pre-market here. So S&P is above resistance, right? This is FOMO. This is shorts getting squeezed. What are they thinking? They really think inflation is going to tick back up. You need oil to explode for that to happen. I've already said that. Not that I know everything, but you're just wishful thinking at this point. Okay, now a lot of people are buying in. Now Qs, looks like the Qs are starting to break. All right, the Qs are starting to break. Here goes the trades. Here goes the big trades. Who else are we seeing down here? Coin starting to recover a little bit. Qs above that resistance level. Let me go to the 1-day chart. We're above resistance. I mean, the next support is in the 80s for the Qs. INDX, is it like 1600? Yeah, or next spot 1600 for the Qs. So maybe we get a couple more days of up and down, trying to figure out exactly what's going on here. But strong, very, very strong market. All right, so let's look at Tesla really quick on this left-hand side. Okay. We do have earnings coming up. I think it's like the 21st. What is it? 21st. 2 weeks we have earnings. But if we did get a better inflation report, I thought we'd gap up and we'd start pressing the new highs before that even happened. So we'll see how that plays out. Intraday, is there anything setting up in the intraday before we? What are we, about an hour into the market? Okay, I'm gonna stick on the 1 minute. Yeah, big gap up here. I don't see any plays here. SPY, a lot of people playing the index. Okay, now this is just algos, buy. This looks like algorithmic buying on the S&P 500. So we probably get a correction back into VWAP if it continues for the rest of the day. We'll see how that plays out. On the left-hand side, I want to look at AMD really quick. AMD is absolutely exploding. And this thing has been flirting. It's been filling that 109 gap and then jumping right back up. So it's a 4%, 4.5%, 5% move. But for the most part, AMD is still setting up. I don't think it's fully ready yet. We need to get above 116, 117. If you have very long out calls, you might be okay. But AMD is a wild card right now. It's a pretty much a wild card, but I think it's consolidated enough to find something on a pullback, right? I think so. It's just very wild. It has big up days, big down days, and you have to get in at the lows and really take some risk here for AMD. But it is wedging. It is starting to wedge. I like this. This is a nice little wedge pattern. And if you get the Qs carrying this market further, then we're definitely going higher for AMD. All right. CVNA, ZM leaps. Yeah. So now it's time to scope out if you want to swing trade, because the narrative is in, right? The narrative is solid. We have a solid narrative. Now you're looking for the technical setup, right? Is the macro in your favor? I think so. I think the macro is in your favor. We have the dollar, nope. Don't know who that is. We have the dollar falling. Okay, the dollar is falling. That is key. Bond yields are coming down. We have PPI tomorrow. That'll pretty much put the nail in the coffin for this narrative that inflation is coming down. So if we think a little deeper about this, it is July. Okay, that means we're looking at June inflation. So next month we're going to be in the twos. We will. And the real risk that we can focus on now, we can laser in on, is the oil prices. That's all you got to focus on is oil. Can it stay below 75? If it doesn't, well, that slows down the narrative. But if it gets, if it stays below 75, we're good. If it drops to the 60s and the 50s, like I expect it to, although that doesn't look as likely anymore. If we can't get above 75, then it's probably less likely. It's okay, because there's still more macro headwinds in the pipeline, right? I'm sorry, macro tailwinds in the pipeline. Now, what I'm missing here is, where's that report at? Did I save it to my pictures? It is. I need to pull it up. Let me try to pull it up, because what it is that I want to show is the breakdown of shelter inflation. Where is it? Dang, I should have sent it to myself. Oh, that's annoying. Yeah, well, I don't see it either way. It is the breakdown. It's going to be in the newsletter. I'll have it in the newsletter, and it is the breakdown of inflation. Most of it is shelter, right? A lot of this inflation is coming from in shelter. A lot of that core stickiness is coming from shelter. It's all coming down. Like we said, it is coming down, right? So tomorrow, what do we see tomorrow? Tomorrow we have who's this? I don't care about Turkey, industrial production, European economic forecast. PPI, obviously, producer prices, couple jobless claims, jobs numbers. We have 30-year mortgage rates. Nothing really big. It's just PPI. It's just producer prices. And then Friday, we kick off consumer inflation expectations. Import, export prices. I expect those to, those might actually bounce. They've been pretty negative. And then we have the kickoff in earnings, right? We have the kickoff in earnings, and like we talked about yesterday, the earnings picture is starting to improve according to FactSet. The insight by topic, according to FactSet, 113 companies are pre-reporting better than expected numbers. Their EPS guidance is starting to go higher, and we haven't seen this many companies report or issue this much positive EPS since Q3 of 2021. So something is changing in the market. Now we got a good inflation report. That's also good. Like I said before, I think we go to all-time highs. I think we continue to break out, go to all-time highs. I'm doing good today, man. How you doing? Just saw that. So we're going to keep right here. All right. Now, what kind of plays do we have? What is playing out? AMD, Tesla. No, not exactly. Still consolidating. This is really good though for Tesla to consolidate a little more. Getting a lot of that consolidation. Advanced decline. Okay. You know what? I'm going to do this. It's going to go off a little bit on TikTok because what I'm going to do is I need to send that report to myself. It's on my phone. There we go. All right, I'm back. There we go. All right, yeah, I want to dive deeper into this. Here we go. All right. Whoa, there we go. Now we can see. All right, so now you can see this inflation month over month. Let's go over this really quick. Let's see what is this telling us? All right, so we got on the top left-hand corner. I'll move around here. Top left-hand corner, we have top 5 individual contributors to U.S. headline CPI month over month. And the biggest contributor is rent, right? Shelter rents. That's okay. We're at 0.2%. Great. Now, just below that, the month over month for core, the biggest contributor is rent. Wow, surprising, right? It's always rent, and those are set to fall. That's why I say that. Okay, top right-hand corner. Okay, the logo is a little bit in the way, but I'll tell you what that is. The biggest component is the dark blue. That is also rent of shelter rent. Okay. And then remaining contributions, whatever that means. But the index is falling sharply. Like this index is falling pretty sharply, and shelter is going to take it negative if shelter starts to roll over. Bottom right hand corner, what do you have? Core CPI. What is the biggest component? Shelter rent. No, there's no surprises here. It is shelter rent, and we've been calling for shelter rent via Zillow prices and Redfin prices, Case-Shiller Home Price Index to collapse. So more details will be in the actual macro report, right? We have the link in the description to that newsletter. It's free. Check it out. But yeah, that's what we're looking at, man. This is just such a good setup, and everybody's looking for the negative. Where could we find it? And there's not really anything negative to talk about. We'll hear what we'll definitely go over what some of these talking heads are saying on CNBC, right? We'll go over that because we want to know what the mainstream is saying about this report. Some people might agree, some people might disagree that inflation is coming down. I already know some people are going to say, well, the base effects are already in, so from here inflation trends higher. But the mistake I think people are making, or some of these analysts, and I'm not the only one who believes this, is that it's a rate of change. Inflation is rate of change. Even if the underlying prices bump a little bit, the rate of change is still lower. The rate of change of these prices continues to decelerate. And that's what we're concerned with, the rate of change of inflation, not the underlying price. When it comes to the stock market, right, of the economy, yeah, it's still going to hurt the economy. And that's why the Fed keeps reiterating that it's going to hurt the economy. All right, so a couple biggest analyst calls, JP Morgan. So let's I'm going to read a couple of these. JP Morgan is calling now for a couple. Let's see, what are they saying here? Let's read a couple of these. Microsoft, our CIO survey shows stable but muted IT budget growth expectations. See, they're already coming out saying they're more bullish. I'm telling you, they're signaling that earnings are going to be better than expected, better than feared. Everybody's so negative, man. The mainstream is, I think the mainstream really, everybody says, don't believe the positives. Well, guess what? There's people on CNBC who are bullish and bearish. Like, you're getting both of them. And when I look, I see that there's way more bears. There's people that are short. The S&P 500 negative positioning is at an all-time high. Everybody believes we're going into a deep recession. They look at the yield curve and they say, oh, we're gonna fall. And we've already got that risk into the market, and the Fed kind of bailed this out. So Morgan Stanley and JP Morgan, all these companies, what are they saying? They're now trying to get bullish on a couple companies because they know that the macro has just shifted very quickly, and it's starting to shift. It's a heavy weight. It is starting to shift. Oh, by the way, if you are an NIO, do you see the Fed doesn't hike rate in the next meeting? I think they still could hike because we didn't hit 2%. So the market is still pricing it in either way, right? I don't even think it matters. This could be the last rate hike. We keep saying that, but the economy keeps coming in stronger than expected. So there is the scenario where the Fed could hike and keep hiking to see something else break so that they can restart QE. At the end of the day, they will go to QE, which is why it's so hilarious. It's so hilarious that people don't understand that we have to do QE. The question is, when does it start? I don't know. I don't know when it starts, but we have to do QE. That is the only way to monetize the debt to actually get this going. By the way, IWM just broke out above VWAP. IWM starting to look good. So Morgan Stanley on NIO, with positive sector sentiment, investors are inclined to take opportunity on the laggards like NIO or XPeng, right? These EV companies. Since late June, we also look forward to NIO to gain traction back to improving monthly sales. So NIO might be improving monthly sales. I don't really look that far into it. I don't really care because, but we are in the upcycle, so a lot of stuff is just going to go higher anyway. Our NVIDIA, Bancorp reiterates overweight on NVIDIA, and that's why we see NVIDIA starting to move up. Here we got Tesla. We're looking at Tesla on the right-hand side. SPY is climbing higher, but let me put NVIDIA in that window because this was a big move for NVIDIA back to retesting the highs. All right, back to retesting the highs. Microsoft overweight. So now Microsoft, okay, best position. We are increasing demand trends across the entire supply chain. So Bancorp is saying, our key bank, reiterates overweight on NVIDIA, and they're basically saying positive, a lot of positivity from they're raising their estimates overweight because to 550, dang, 550, fundamentally best position to see demand trends across the entire supply chain for generative AI. And that sort of supports the idea that, hey, this AI trend is just getting started. It's not, it's not hype yet. It's really not hype. Those picks and shovels like AMD and NVIDIA are going to be pumping out a lot of chips over the next 6 to 12 months because there's just so much demand to create the productivity economy, the knowledge economy through chips. Wow, nice. Here on NVIDIA, you do see if we get the Qs continue to roll out higher, NVIDIA could push up. But the Qs are setting up nice little bull flag there, nice little falling wedge on NVIDIA. I know there's going to be a lot of plays, but PPI comes out tomorrow, and I think that puts the nail in the coffin before earnings. Bard reiterates Tesla outperformed. That's what I like to see. Who is this? Baird says it's bullish on the company's supercharger opportunity. We estimate that Tesla supercharger currently operates at 8.75% utilization, including Tesla and non-Tesla vehicles. The supercharger network could contribute up to 5.2 to 15 billion in revenue by 2030 and add 15 to 45 cents to full year EPS using our charging scenario. So I'm going to be excited to see Tesla earnings. They're going to talk about in the earnings with this bullish setup on, inflation coming down, that these earnings reports, the companies who do well in earnings are really going to get a boost. They're really going to get a boost here. All right. So yeah, Asan, they could still hike, but I don't think it matters at this point because we're seeing the bond market pull back, right? When I look at the macro technicals, we got to keep in mind, what are the macro technicals doing? The dollar is absolutely just getting crushed, right? The dollar is falling apart. What is that? That is risk on right there. That is the risk on. We've been waiting for this. This is the lowest level that we've seen in the dollar since 2022 in April. So I think the dollar right now, the dollar signal, the dollar and the signal, the signal coming from the dollar is probably the most underrated signal that people are not understanding. The dollar collapse is signaling the confirmation. And when I say collapse, I don't just mean outright collapse. I'm saying, and let me show this on the chart. All right, let me make this bigger. I'll put the dollar up here because we are looking at the TOS charts. As the dollar starts to decelerate beneath these levels, it is the signal to you that investors are they're leaving the safe haven dollar for a reason, right? Because the outlook going forward for the stock market is improving and risk in general is improving. So look at this bit, like this is what you call a real bearish pattern. This is a bear flag coming from the highs, and now it's starting to break, right? Bear flag, whatever you want to call it, it's breaking down, or reverse head and shoulders, whatever, it's breaking down. So the dollar's starting to break, and next stop is probably 90. Next, I mean, with this big of a setup, the dollar's coming down to the I'd say 96, 97. It's probably the next stop for the dollar. Let me see, where's that? Where do we see the major support at? Max W. Let's check this out. Where's our major support on the dollar? We're blowing through previous support, right? The dollar is breaking through previous support 100. You're gonna rip through that. Yeah, we're probably going to 96, 95. Might take a couple months, but that's what it's looking like on a technical basis, right? If there's no more other risks coming in. So the dollar's starting to collapse there. And man, I didn't even think it was going to push this far this fast, but that's bullish. That's extremely bullish. Now let's look for not us, but now Bitcoin should catch a bid here. And we haven't even started printing yet. The dollar's collapsing and QE hasn't even started. I mean, QE is in motion, but real QE, currency debasement, isn't really, like, it's not even in the market yet, right? Market is not pricing in QE yet. So that's huge. That is huge. All right, let's answer that Tesla question. How do you see Tesla earnings going? I really don't know, to be honest with you. I don't really know. I'm a lot more focused on the macro environment. I still think the production numbers kind of signal that their revenue is going to be increasing. When they talk about margins, I don't really know how the earnings are going to go, but I definitely am interested in hear how they talk about further guidance and margins and China. Because look, China has to re-stimulate. China's going to re-stimulate. They have to, because they're able to be in QE. So I'm very bullish on the outlook. The current numbers might not be great, but I'm also looking for the margins to bottom. So if margins are starting to bottom and we see that, Tesla goes higher, right? You want to see that margin bottom out. And then supercharger network expectations, full FSD, man, if he mentions that they're closer to full self-driving, that's going to be a huge catalyst. And yeah, that's where I think the next FOMO comes for Tesla. It's going to be earnings, but definitely this better than expected inflation report is going to create upside for anybody who beats earnings or has a good earnings report for margins, for the revenue growth, for EPS, gaining market share, whatever it is. The macro is going to support that, especially with the dollar starting to fall right now. Hey, NVIDIA is really setting up nice. Just to FYI, NVIDIA is really setting up nice. If anybody is a trader, this is a really good setup. Just keep an eye on the Qs, and the Qs are starting to trend higher also. So I'm not taking this trade. Obviously, I'm not trading right now, but NVIDIA looks really good. So, okay, yeah. Netflix outperformed. Look at, all of a sudden, the inflation report comes out better than feared, and all of a sudden, everybody's increasing their holdings, right? This is a macro wave. That's why the risks are disappearing. Big man's coming. I think the best stock TA comes from the mind growth. Hey, I appreciate it. Shout out to you, big man's coming. I appreciate it, man. All day, every experience, just to stick around and learn. Yeah, we do a lot of TA. Oh, there goes NVIDIA. See, there goes NVIDIA trying to break out. Make sure it holds, right? Make sure it does hold. Man, breakout NVIDIA. Oh man, I want to trade that, but this is not my job. My job is to deliver you the context that is so confusing to the market, because you can make a nice trade on NVIDIA, like 3, 4, 5 points. Wow, I made 5%, 10% on an option, but the real money is made holding this bull market from the bottom back to the top until the macro variables. We are at the bottom of the cycle. The cycle is just starting to turn up. The overall big cycle is starting to turn up. And the easiest opportunity is to really be long for a while, especially with inflation collapsing like this and all this negative sentiment. So many people are off sides. You hear them still calling for a deep, dark recession, a collapse of the economy. It's not going to happen. Not as inflation decelerates. So anyways, there's a breakout on NVIDIA. Left-hand side, I think AMD is probably catching that win too. But AMD has to get past the previous level that it got resisted at, which was previous support turned into resistance. See, let's go to that 3 minute. It is AMD is starting to wedge a little bit too. Okay, what else do we have? I know we've been looking at AMD in this. Let's look at Palantir on the left hand side of it. Palantir, it's strong, but no setup. Google is Google's trending higher. Nice move on Google there. Nice pull in break. That's an entry. Amazon's really been suppressed for a while. I think they're gonna make a run eventually. They're just really suppressed. They probably need that earnings report to come out for Amazon. All right, so UBS initiates commercial metals. Don't care. Zillow overweight. Wow, interesting. I haven't really thought about Zillow for a while. What is Zillow looking like here? Zillow, Open Door, same category there. Wow, Zillow used to be at 208. So yeah, Zillow, Open. Wow. Also, keep your eye on Twilio too. If Amazon does break TWLO, if Amazon does break, Twilio should have a nice run. Although the earnings are not the best, they are one of the leading AI companies for, well, the whole AI operations into, what is it, API, CPUs? No, I think it's APIs. Wells Fargo names Amazon a top pick. So here we go. Anyways, the whole point was that now the analysts are coming out very bullish, right? The analysts are coming out saying buy side AWS expectations rising ahead of print, believing Q2 2023 bar is now in line with street 10% year-over-year growth. Yeah, so now they're getting very bullish. They're getting very bullish because the macro headwinds are starting to evaporate. They're starting to evaporate, and it's going to come quicker than expected if we keep seeing this. Now, it is, like I said before, oil is still the issue. We're still keeping our eye on the oil price. Hopefully, it stays below 75. Trying to see if there's anything else out here. Toast. Oh, 3M. I know 3M was getting crushed. They probably had a nice bid. 3M might be bottoming out here. I think they're done with, not that this is my type of trade, but they might be done with the lawsuit, right? They had that lawsuit, the military lawsuit, I think. JetBlue. Dang, this is a lot of initiations, man. A lot of people getting upgraded. I mean, a lot of companies getting upgraded. This is how 70% of people want to learn about products, G7 countries. SEC to vote on new money market rules Wednesday that the industry opposes. Well, that's interesting. Oh, APIs. Okay, so it is APIs. That's what I thought. Twilio. Their earnings are very terrible. Who is this? Mr. Manuel Always. You bought puts. Would you buy puts on Mr. Manuel Always? Got them puts, huh? All right, so I want to check this out. This is new rules for the money market funds. And the reason this is important, because remember, the money market funds are sucking liquidity out of the banking sector, and that creates risk. So I want to see if this report is supporting the bullish narrative or if it's a headwind in the future. The SEC, and let me know if you want me to throw something up there to, oh, QQQ. Wow. Okay, so this guy in the chat, but shout out to you, man. You're dangerous, bro. You're gonna short the Qs. You're gonna short the Qs. At this level, the Qs just gapped above previous resistance. Right? What is that? 390, 372, 372.75. So So we're above 372.75. Blah blah blah. We're just starting to break out. You're gonna short the Qs. That's a dangerous move. Maybe you're gonna short the Qs. You know what might be a good move? I wouldn't do it. Is when the Qs have to rebalance. Could short the Qs. It might work for a day, but I mean the overall market is exploding. So better than expected inflation report. What is your thesis for shorting the Qs? That is dangerous, man. You're a bold guy. You're pretty bold. Shorting the Qs. All power to you, but it looks very bullish. I don't even see where you would enter at. Unless you're already short. Are you short the Qs? Because if you're short right now and you're day trading, you must have got short at this top, what, 374.23. If not, well, it is trending up. But yeah, what's your play on this? I want to hear what your play is shorting the Qs. That's very interesting. You would think people are going to be very bullish on the Qs. But yeah, what's your thesis, man? Mr. Manuel. All right. In March, during the early stages of COVID, liquidity began drying up in the commercial paper space, including money market funds that invest in cash, U.S. Treasuries, and commercial paper. The Federal Reserve stepped into the backstop. Yeah, we already know that, to provide more liquidity. Why are you going back that far? Most money market funds invest exclusively in cash or government securities. So, dollars or treasuries. Some known as prime money market funds also invest in commercial paper. All are subject to liquidity requirements. Some assets have to be readily convertible to cash, including levels of daily and weekly liquidity requirements. The SEC is proposing to increase the daily and weekly liquidity requirements from 10% on a daily basis to 30% on a weekly basis. Okay, to 25%, 50% respectively. Wow. The effect would be to increase the assets a fund has on hand to meet potential redemptions needed. These for money market funds. Okay, so the SEC is seeking to reduce concerns about liquidity by increasing the threshold for daily and weekly liquid assets to provide a greater buffer to meet larger and more frequent redemptions. So if they're increasing, so it sounds like they're just trying to reduce any type of risks as they keep hiking rates. Removing fee and gate provisions. Okay. There are fees that can be imposed by the board of prime commercial paper money market fund to liquid. It's a bunch of language. I'm trying to simplify it. Wow, deregulation, huh? They're taking away they're taking away fees and gate provisions. Okay. Transaction okay. Yeah, it looks like some regulation moves from the SEC. They want to basically increase the collateral for money market funds, and then remove some costs. So they're just trying to. I mean, this is not my expertise, but it sounds like they're trying to grease the pipelines for the U.S. Treasury market. So they're looking, this is pretty much to sum it up. The SEC is looking to solve for a problem, but they have not proven that costs are incurred by redeeming shareholders. Deputy funds are not selling to meet redemptions in most cases. They have cash on hand to meet redemptions. They haven't demonstrated transaction costs are being borne by remaining shareholders. Okay, I don't even know what that means. Oh, okay, the cost for selling their funds. So yeah, I don't know. I think sounds like a nothing burger. But it's good that the SEC is at least looking into pumping those cash requirements, because once the Fed starts QE, I think what they're saying is you guys can't take as much risk. You need to hold more collateral as cash, and then you can lend. Maybe I'm off. I don't know. I don't know. I'm just trying to figure out if there's any risks to that market. Yeah, I don't even think it's I don't think it's that important. What? Okay, now this is interesting. Here we go. We got a good, they're breaking down inflation here. This will be good. All right, anyways, that guy that was shorting, it's for the pullback for a few hours. Okay, Barr also said about rate hike yesterday. People tend to forget that. Okay. I mean, the market's already, just so you know, Mr. Manuel, the market's already priced in a rate hike, just so you know. Just a FYI. Keep that in mind. So yeah, intraday trading, yeah, for sure. But overall, the macro trend, I mean, it's just getting caught holding a position overnight is pretty scary in this environment if you're short, because a lot of people are going to FOMO in. Keep that in mind. There's a lot of FOMO still coming in, a lot of cash on the sideline. So yeah, the market's already priced in a rate hike. That's not a surprise. What it hasn't priced in, and we can look at the CME data, what it hasn't not priced in is a second rate hike following today. So we'd be at 5.25 to 5.25% if they hike in this next meeting. And then I think it's August we skip, and then we come back in September. The market has not priced in a hike in September yet. Okay, we have not priced that in yet. But yeah, if you're talking about a couple hours, that's not bad. That's definitely some. There's a lot of hype right now, right? Short term, you can profit off anything. Failed breakout on Nvidia. What else do we see here? VIX is still falling. Man, the VIX is falling. The dollar is falling. This is a great setup. You're just waiting again for that pressure to relieve itself, because everybody's piling in. A lot of algos, it looks like, are buying the market, and then once that clears up, you're going to get a nasty pullback, and then that's where the buyers come in. That's where you start to see the real buyers come in, because the chasing is done. Chasing is probably done. We still got PPI tomorrow, earnings on Friday. All right, so the breakdown, here's the inflation breakdown for June 2023. Out really quick. I don't even know if that's visible. May not be visible. Maybe I'll make it bigger. There we go. Yeah, you can see that. Okay. So these are some of the categories that the year-over-year, this is year-over-year categories of inflation, right? Motor vehicle repairs, up 19.8%. Frozen vegetables, you guys are probably feeling that. Motor vehicle insurance, that's part of the services part. Candy, chewing gum. Pet food, yeah, I know that's up. Lease cars and trucks, 11%. Bread, 11.5%. Sugar, 11%. Carbs, 9.1%. Rent a primary residence, that's what we need to get down. That's a big factor. Rent a primary residence, 8.3%. Food away from home, wine up 7%, 6.7%. Postage, 6.7%. Food and electricity, 5%. Items less food. Here's the negative. Here's what's falling over: recreational books, used cars, and trucks. I think that's a bigger purchase, used cars and trucks, than repairs. Repairs are up a lot, but that's a service, so that's why services, that's part of that sticky services that's tough to get down up here, which is motor vehicle repairs. That's a service. And then motor vehicle insurance. Those are the sticky parts of inflation that are not resolved. I don't even know if they do get resolved. But shelter will. Shelter is going to come down. Eggs are finally declining year over year. Televisions, bacon. Car truck rentals, energy is negative. Gasoline, that's the big one. Health insurance, okay. Gasoline, airfares. Look at the big move in airfares. And I know airfares were going up. Airfare inflation is coming down. Utility gas services coming down. Gasoline, negative 27.7%. And then here's their CPI year over year, and all items, big blue, and then the dotted is your core. So we're rolling over in inflation. I'm just trying to make sure we don't miss anything here. And this is the other report. So things are coming down. A lot of encouraging signals. I think the market does pull back and find support somewhere off this inflation report. But it is going to be important to find where people are still bearish. See if there's anything actually sustainable there, or if they're just complaining because they're short still. All right, so we're getting that pullback in the Qs on the left-hand side, and then the SPY on the right. IWM, advanced decline. VIX still falling sharply. What does Caterpillar look like? I know Cat was pretty strong. Cat triple. Oh, that's right. We haven't even looked at that. At least one more time. Yeah, so the market is pricing in one more rate hike for sure. And then after that, we might be on pause. So I mean, we did pause 1 month. They have actually never paused and hiked again. So this will be unprecedented. Oh, rent falls. Okay, that's interesting. Let's look at this. This is just more. This is really good data. 11 U.S. cities where rent has fallen the most. This is interesting. So the 11 cities that rent fell the most: Las Vegas, negative 6%. Riverside, California, 5.9%. And this is the largest year-over-year rent price decreases as of May 2023, based on Realtors.com. Okay, so and this is encouraging because this also supports the idea that core inflation will collapse over time because the real-time rents are negative, while you see shelter rent inflation is still positive and barely starting to roll. Phoenix, negative 5.7%. That's where I'm at. Austin, Texas, Round Rock, Georgetown, Texas, negative 5.6%. San Francisco Bay Area, negative 4%. Tampa Bay, Peterson, St. Petersburg, my bad. Clearwater, Florida, negative 4%. That's where Kathy Wood lives. I actually wanted to move there. Anybody been to Tampa Bay, St. Petersburg? I've been to Clearwater, but I wonder how it is. I'd love to live by the beach. Except for those hurricanes. Dallas, Fort Worth, negative 3%. Charlotte, North Carolina, negative 3.5%. Sacramento, negative 5%. Atlanta, negative 3%. Denver, negative 3%. So these are the cities with the biggest year-over-year decreases as of May. That's positive. Okay, now this is where let me see. Okay, here we go. This is also important. The top 10 cities where rent has increased the most in the last year. So I'm guessing people will leave these cities, start to leave these cities. No way, bro. What? This is insane. Okay. This is insane. All right, so New York, number one. Yes, Tampa Bay and St. Petersburg, absolutely beautiful. I definitely want to check that out. I want to go there. I've never been there. No, I have been to Clearwater. My bad. I don't think I've been to St. Petersburg though. All right, IWM starting to turn up again. Definitely starting to turn up. Okay, Oxford. Oh, I'm sorry. Amagansett, dude. I've never seen this before. Amagansett, New York. Never heard of it. But it says the average rent price is $43,000. What? A month? 63% increase in May. Wow. Okay. So some special place in New York. These are cities. These are not states. Oxford, Mississippi, 1600 up 37% year over year. Orinda, California, $5,000 a month, 36% up 36% year over year. St. Pete Beach, what? How is that? Oh, okay, this is the beach, up 30% year over year. Auburn Hills, Michigan, 1300. Okay. So North Carolina. So it looks like these are just cities. Very interesting. So there's so much. There is a lot of data. But for the most part, those cities will probably lose a lot of demand. That is just too much. That's insane. Insane increase, especially in New York. What does it say here? New York in the surged by 63% in the last 12 months. Yeah, that's way too much. All right, so inflation is, and this is all about inflation, right? We're getting the inflation report. A lot of data out there for inflation because this is inflation week. Overall, it's falling, but the details are also interesting, especially if you want to move. So it looks like the number one city where inflation is still rising is Miami, Florida. Miami, Florida, inflation is still rising. Detroit, Michigan, inflation is still rising. Phoenix, Mesa, Scottsdale, inflation is still rising. 1 year increase 9%, 2 month CPI increase 1.4%. Wow. So inflation isn't like, that's why you got to look at the macro, because overall, you know, inflation looks so much different in different areas. Whether it's shelter, food, overall, macro, whatever, it's always moving around. It's really hard to gauge it. So the biggest things I like to look at are energy costs, shelter costs, and food for people, but mostly energy. Those oil prices are big because they also factor into transportation. They factor into costs for companies for PPI. Seattle increased 1%, 6.9. Not bad. Chicago, San Diego. I'd love to move to San Diego also. A lot of inflation data out, man. They are pumping out inflation data everywhere. I don't think ever have people been so aware of inflation since the pandemic. I don't think that's ever been a factor. Oh, what up, Soggy? What are you looking at, Sog? Got the charts over at BlueTube. Yeah, I want to hear definitely what these people say about the inflation report. Also, all those guys that were super bearish, what are they going to say now? What do they have to say now? Microsoft. Okay, we're looking at individual names. Q2 bank earnings on deck. What is this lady saying? Slower loan growth, rising deposit betas, normalizing credit delinquencies. Banks might have it rough. Banks definitely might have it rough, especially after the data I saw, or the data I pushed out in the report, which showed that the banks have nothing but negative EPS guidance as a whole. There was no positive guidance for banks, for financials for banks. So, but some banks will outperform because of if they're able to loan, they're probably making a lot more money, especially if they have those if they're in money market funds collecting interest. But yeah, banks are going to get beat up. Maybe that's the bears of the recession. That's their next thing, is like, hey, dollar broke down. Did we just see that, Pekoski? Dollar just broke down. Let me throw it on here. This is important. Starts the macro trend. Dollar 105. Uh-oh. Dollar starting to break. Yep, dollar's under that level. Big news here. Well, nobody's going to think it's news, but that is huge. On a technical basis, this is the quiet macro turn starting to happen. What is a BTC looking like? Not really reacting. Okay, we're not really getting a reaction. What about TNX? These are rates. Rates are coming down. And if you saw in the newsletter, we said that the dollar is starting to diverge from the U.S. Treasury yield, or the bond market. Usually when the bond market sold off, the dollar went higher, or yields went up and the dollar went up. And this past couple of weeks, we saw the dollar actually decline versus yields. And that was a very bullish signal from my opinion. And now we got this inflation report. So once all this stuff gets digested, it's going to take a couple days. I think Monday will be nice because we'll be able to digest headline CPI, year over year, core PPI on Thursday. We'll be able to digest some of the bank earnings on Friday. You got the whole weekend for the market to digest that. Oh, you're long euro. Okay, nice. I think the Japanese yen is also moving against the dollar, I heard. So once the market digests all this data, I think it's going to say, oh, wow, this is a better picture than we thought. And then Monday, we start moving up. So it might take a while. We're going to consolidate. We're going to move higher. We got to check. We got to hold the previous levels. It's not just a pure breakout. It's a breakout and hold. Do we hold the levels? Hotel rates cooling. Hotel rates cooling. Everything is about inflation. So hotel rates are cooling. Here comes the bullish narrative. Here comes the bullish narrative. I see it. All right, I'm gonna switch over to Bespoke's Twitter, because Bespoke's Twitter has a lot of, well, maybe I'll just talk about it, but it has, no, I have to show these charts. It actually has a lot of really good charts on it. It's a research service. Who are they? Bespoke Investment Group, Financial Market Research. Yeah, they are a research service. They have a lot of good charts suggesting that market breadth has been picking up. And we've been fooled in the news. All these people saying there's no market breadth, but there actually is. See if I can find that chart. Oh, here it is. All right, so this is two of the most cyclical sectors. I'm gonna put this in my. I'm gonna definitely add this to my macro report. This is really good stuff right here. All right, so here you can see advanced decline. This is sector cumulative advanced decline lines in the past year. And what he's pointing out here is two of the most cyclical sectors, consumer discretionary. So you got like Amazon, Tesla, technically in those sectors, Nike, and industrials have the two strongest advanced declines. So industrials making new highs, meaning more stocks in the industrial sector are climbing higher versus declining. Same thing for consumer discretionary. Comm services still down. Consumer staples are pretty much peaked out. Healthcare hasn't moved. S&P 500 is at all-time highs, despite what you hear. It's just crazy. People say there's no market breadth, but hey, the advanced there's different ways to measure it. You can't just say because big tech outperformed, there's no market breadth. Well, not everybody's going to shoot straight up, but when you look at advanced decline, the S&P is pretty much down here in the right-hand corner, all-time highs. All right, so keep that in mind. I'm going to throw that on the macro report also, to show that we are getting market breadth. Bitcoin log scale. There have only been a handful of times in the last 6 years that Bitcoin has traded in as narrow range as it has over the last 2 weeks. Is that a buy signal for Bitcoin? And everybody's researching. What are they saying here? Google search interest for inflation has tracked year-over-year CPI closely. Peaked in the summer of 2022, is now at 24%. Yeah, because consumer inflation expectations are lower. Keep this, digest all this stuff, because I'm putting it up here. I'm going through it with you. I'm reading it myself. so that you can understand this narrative is starting to strengthen. This bull market narrative is starting to strengthen. Wave 2 FOMO is in the pipeline. Yep, Wave 2 FOMO is in the pipeline. I got you, Sagi. Just making sure we hit all this. Man, this is a really good Twitter handle here, Bespoke. BESPOKE or B Spoke. Really good Twitter feed here. We got a lot of good research. All right, Sagi, not much today. Just Tesla not having a good day, so keeping it small. Took a call near low of day on Tesla, but I went too far out of the money. Didn't move much. Okay, fair enough. Fair enough. Well, I'm looking at market breadth. I think Tesla, you're going to have to see a setup. I haven't really seen anything on Tesla. I think the best setup that I've seen so far, just to keep your eyes out, are on the company, on the stuff that I'm tracking, the macro setup. Let's see. I know you guys do like a lot of intraday trading, some of you, but you really want a big technical breakout on the daily charts. Oh, Roku. I almost forgot about Roku. Yeah. I almost forgot about this. Who was it? Roku, ZM, Teladoc. Let me move it up here. Roku, ZM, Teladoc. Mostly Roku though. Roku, and who was the other name that was in my watch list, or who I was looking at? Roku. Is Robinhood moving? Oh yeah, Robinhood's been moving up. Robinhood's starting to break out. Nice big breakout earlier this year. Broke out, retested, formed, and that's a lot of consolidation there. Robinhood might make a really big move, and their app is doing a lot better. They just need to get better charts. They need to be like Webull. If they can get their execution like Webull, then Robinhood is gonna attract a lot more traders, a lot more investors. They have that retirement fund, 24-hour trading, right, for Robinhood. Let's see, what does it look like in the intraday? What are we seeing here? We're seeing Robinhood above $12. Okay. Hood looking good. Robinhood looking solid. Oh, okay, here you go. Here's your Tesla setup, right? Taking away that pre-market. Tesla is starting to break that trend. You could get long here on Tesla on the break of this trend, especially after it bottomed over the past couple days. And if you draw another trend from the previous highs, it's trying to break out of that trend. So Tesla does this a lot. And this is good support here. This is what, 271? Yeah, it's pretty solid support. 271 could get a run here. But yeah, Roku for sure. I was actually looking at Roku because Roku had that big move. It is breaking a technical resistance level. Roku's breaking out of a huge technical resistance level. Gapped up this morning. Now it's pulling back to try to find support. I bet you it's at PDC. I bet you it's pulling in a PDC. So, and Roku has really good price action when it does move. I'm actually going to throw it on the other chart. I want to see what it's looking like intraday. Roku below VWAP right now. I think it was Twilio that I was looking at. Mexico stocks are surging on reshoring bets, but risk can knock down the rally. Yeah, the Mexican stock market moving up too. But a lot of new news just keep coming in. Everybody's getting FOMO. The market has to digest all this before it moves higher. Disney is hovering around 87.90 for 2 months. Any thoughts? The floor is 84. Okay, yeah, I'll check out Disney for sure. Throw Disney up there. Roku. I think they got upgraded also, just FYI. They moved yesterday, they moved up. So this would be a second day play. But yesterday, Roku had a big move. After that, I mean, what was this? This was about a 13% upside move. And then now they're consolidating. This is really nice for Roku. I'd almost want to say that it's starting to wedge above that resistance level. Roku above VWAP should keep printing, in my view, if I look at it that way. Roku above VWAP. Hood doesn't have the best options. You're gonna have to trade shares there. It's the AMD, bigger technical setup for AMD. I think AMD is also setting up for an entry on a bigger swing trade. So I'm keeping my eye out there. And then I'll throw on, you said ZM. Yeah, ZM looking good. ZM. That's a hard swing. There I'm at 79 call. Good for ZM. Yep, I'm in those leaps too, man. I got the ZM leaps. We got ZM. We got Zoom team here. Everybody's still using Zoom. Every time I see people online, they're still using Zoom. The demand is there. I think it's undervalued right now. So DIS, Disney. Take a look at this big term chart on Disney. Okay, let's take a look at this. But before we do it, I'll be right back. Got to use the little girl's room. All right, cool. Disney. Whoa. Okay, Disney setting up. Disney is looking solid. Let's see if I got that working. I think Disney has found support now. It looks like we're finding support at 86. Is that what you said? What'd you call out? 86, 87, 80, 90 for 2 months. Any thoughts? The floor 84. All right, so it's beneath the moving averages. I think it's time now that we're in a bull market to start looking at this 4-hour chart to zone things in, because the bigger time frames, and what I mean by that is when we look at S&P 500, you know, we've been using the big, how do I say this? We've been using the daily moving averages, right? But now that we're in this momentum trend, we're likely not coming back. We pretty much pushed, now that we're in a bull market, like check this out. When the bull market is on, does it look like we're pulling back to the 200 moving average? No, you bounce and you go. And then it's the 50-day, which you flirt with. You start flirting with the 50-day moving average, right? Sometimes the hundreds, if there's a lot of the 100 moving average, if there's a lot of volatility. But my point is, now that we're coming out of this bear market, we're going to be trending on that 50-day. And now what it means also is that we're looking at the 50-day moving average and then on the day, and then we need to turn over to those quarterly moving averages might work, but I think we need to shift down to the 4-hour chart. You could maybe even shift to the hour. Let me see, what does it look like in the hour chart? Yeah, to get even more tight signal, because we're in a bull market. So that's what I'm going to do with Disney now. I'm going to start switching the way I use the moving averages, and I want to see where there's consistent level support or consistent reactions off that level. So Disney, clear support, very clear support at 88, 86. I'd say 88 right now, in the intermediate 88. That was a previous resistance level back in December, 88. And now we're above and holding 88. So, and I'm looking at the 4-hour here. We need to get above the 4-hour 50-day moving average. We've got 2 rejections there. Very clear, 2 rejections. Is this really something? So 88 support. Let me redraw the 88 support. Okay, clear 88 support there on DIS, Disney. Right, look at that. Very clear support on 88. So that's what we're looking at for support at 88. You have the 50-day, the 50 SMA. I'm gonna have to call this SMA. I don't want to say the 54-hour, like that's just too many words. The 50 SMA, simple moving average, or the 50 moving average is showing a lot of resistance. This is the second resistance that we've gotten on that 50-day moving average. So once we get above it and hold, Disney might be a good play. And it's very clear also that there was some resistance. I'm going to use these. I wonder if that color is the best color. There was some resistance earlier too here at 90. This is 90.50 cents. I'd say 90.50 to about 91.25. Yeah, that's about right. 91.25. So there's your zone for Disney, right? Could be consolidating in the zone for a while. I think we're consolidating in that zone for a while. Well, I don't know how long. I'm sorry, I don't know how long, because I haven't really looked into Disney's fundamentals, or I don't really know what their catalyst is. On a technical basis, that is where the consolidation is. Once you get above and support that level, not just a breakout, get above support, then it should be, it should have some wheels, especially with the market moving higher like this. So that's my view on Disney. Looking at the bigger trend, still has some time to get, still has some time. Maybe not this one. I'll take this one off. But in the short term, yeah, it still has a little bit of time. Still in the downtrend, but it's holding. So that holding of 88 tells me it's trying to reverse. It is trying to reverse on Disney. So I'm going to start looking at these 4-hour charts now. See Amazon supporting that 50-day moving average. Tesla really still elevated above it. Nvidia. I'm just looking at the 4-hour SMA. I want to see how stocks are moving off of it. Roku, Teladoc, not really nothing there. Zoom, Zoom's getting above all those simple moving averages now. What else do we got down here? Yeah, Disney, good deal. Yep. Good deal on Disney. So yeah, this is ZM. Very clear resistance on ZM, right? Got to get above 72 and hold. Pretty clear. And big catalyst there. All right, Apple support off that 4-hour. Man, I haven't used a 4-hour for a while. I used to use a 4-hour all the time. But when the macro changes, you have to find the right moving averages that match the price action. You want to see consistency off those moving averages. So you got to flip your time frames around a little bit. So Apple's wedging into that level, all-time high Apple. Microsoft today supporting the 50 moving average. It's clear. This 4-hour chart is now what we got to look at. Netflix, a little above. Meta. Man, Meta, what is Meta looking like today? Let me switch over. What is Meta, or what the heck is Meta doing? I think AMD is setting up. Meta, man, Meta's been on a rampage. It's been on an absolute rampage. Could be setting up for a second half move though, later in the day. Making a lower high, pulling in. Yeah, Meta looks good for the day too. Still has a lot of room for the upside. IWM holding up. VIX still pulling back. All right, so back to this chart. Okay, so look, see how AMD pulled in, got rejected. See, yeah, the 4 hours working now. I think the 4 hours starting to work. And here what I'm seeing is we got rejected by the 50 moving average one time, and then now we're trying to test it a little bit. That previous level at 115, 116 got rejected, but now we're supporting the 100. So this is interesting. This is kind of weird though. See, because we had that big bull cross earlier in the year. It just ran up. It probably ran up too much. I think AMD just ran up way too much, and a lot of relief pressure there. But it is trying to break out of this wedge. Let's see if it can hold. It needs to hold at least 112, 111, 114, 115. It's not doing it today. It's a pretty choppy chart. AMD's pretty choppy right now. It's not the most clear chart, to be honest. It's not the. And you guys get anything else? But the next CPI, I'm worried about all the new jobs, oil up. Bukowski, yeah. I don't think the jobs make a difference on the CPI because it's a rate of change. But the oil can, because oil is the most volatile component. So we just got to keep our eye on crude getting above 75. All right, that's what we really want to see. Can crude get above? I don't want to see indicators, bro. Give me the hell is it giving me indicators for? So we're at 75 now. We're sort of hitting that trend, right? Perfectly on the downtrend. This is it. This is it right here. We've moved up all month though, so it's probably gonna be hot. Not hot, but it'll probably not fall as fast. But we're gonna be in the 2%. I'll mark my words. We'll be at 2%. In at least the not 2% flat, but we'll be in the twos next month. We'll be in the twos next month, and shelter's still rolling over. So we still got some downside pressure. It's still all about oil though. Will oil remain lower? All right, Meta, AMD, Roku needs to get above VWAP. Do you think markets? Let me put your stuff up there. So, there we go. Do you think markets will react much on headline inflation if core trends down? I think what you're saying is if headline inflation, that's kind of a tricky way of saying it, but are you saying like, okay, so if headline inflation surprises in a negative way, but core trends down, will markets react? Now that we're below 3%, like even if core if headline bounces around between 3 and 2.5, I think that's okay if core comes down. I think it's still going to be very bullish as long as core continues to trend lower. Because 4.5 to 5% inflation is not the same as 2.5 to 3%. As in, the market's okay if things bounce around at 2.5 to 3, right? If it bounces around at 4.5 to 5, that's an issue. It's a big issue because that's testing the Fed funds. That's testing restrictive territory. Where at 2.5 and 3, that's pretty much at target. So guys, remember, headline is pretty much at target, right? It's pretty much at target. So it's progress. I'm not too worried. There goes Roku trying to retest VWAP. All right, let me get back to this chart. On oil, yeah, but yeah, for sure, keep your eye on oil. Oil is breaking out though. If we look into June, it is breaking above the 74 level. These are the 4-hour charts. Yeah, it's breaking out. Oil is breaking out. Maybe we'll get that resistance. We'll see. That's the worry there. That is the worry. Okay, so S&P, right? Still pretty overextended, but this was a good print. Qs are actually slowed. Actually, the Qs, let me see the RSI. The Qs have actually slowed a lot. The Qs have slowed a lot, so this is good. IWM, pretty bullish, but that has a lot of room to run. And then let's look at crypto on the 4-hour chart. Oh, that looks bearish. I don't know if you can use these though on crypto. It's moving 24 hours a day. TSM, okay. Adobe, Oracle. Oh yeah, Oracle's looks like it's starting to find support. I'm not really a fan of these, but I'll look at them. These are just 4-hour charts. All right, well, let me flip over to what stocks are in play. Unless you guys have something. Other than that, I'm gonna go back to this bespoke. 80% of stocks in the S&P 500 are now above their 50 daily moving average. Look at this. Look at this breadth reading across sectors. It's cyclical, surging, and defensives lagging behind. So when you hear there is no market breadth, you know, from whoever it is, I'm sorry, I don't want to say they're wrong, but they're definitely, you guys know what I'm going to do. Stupid. There we go. Here, let me put this louder. Stupid. There we go. So that the TikTok could hear. They're just hearing the headline. They're hearing what, they're not looking at actual data. They're just saying only big tech is moving the market. Not true, bro. There's so many breadth indicators. So many breadth indicators. It's just not even funny. Yeah, take a break there, Soggy. We'll catch you later. I know you're trading futures. I'd even say, hey, for a lot of people, the best bet is just to buy and hold. We're in a bull market. You're gonna get shooken out, and a lot of things you buy, they're just gonna keep going up. So that's my take on it. Buy and hold is the easiest thing to do right now. So yeah, S&P 500 sectors, percent of stocks above the 50-day moving average. Real estate, energy, industrials, tech, financials. Who's down? Staples. So the defensive stocks that they keep trying to tell you to get into, they're down. They've been up for a while too. That's bespoke. All right. Now this one, 100% of stocks in the S&P, real estate and energy sectors are above their 50-day moving average. Industrials is 98%. Tech is at 92%. I think this is the same chart. What are they saying here? Oh, okay. He's just commenting a little differently. All right. Now we've seen a huge expansion in new highs in sectors like consumer discretionary, industrials over the last few months. Check out this chart. Nice. Net percent of stocks at 52-week highs in the past year. So again, when you hear there's no market breadth, well, the consumer services in the past year, a lot of stocks at 52-week highs. Consumer discretionary, over 10, what is this? Near 20% all-time highs. Industrials near all-time highs. What is this? S&P 500 in general, above close to 20%, 10 to 20% all-time highs. A lot of companies at all-time highs. 52-week highs. I'm sorry, 52-week highs. Misspoke there. Oh, that's supposed to be RKBL. Is that Rocket Labs? Bro, that's a big mover. You guys got to be careful with these Rocket Labs, or at least know why you're playing it, right? Know why you're playing it. So Rocket Labs, I'll take a look at Rocket Labs. On core basis, there have been just 3 stronger than expected monthly reads that fewest November, whatever. At the headline level, there have only been 2 stronger than expected CPI readings in the last year. Okay. So really, expectations for CPI have been much lower. Nick Timrose. This this is really good. Core inflation, still inflation stuff, just reading through it. With Wednesday, so Nick Timros is the reporter for the Wall Street Journal. With Wednesday's report, the Fed funds rate effectively at 5.1% is above the trailing 12-month core CPI rating. And remember, we said this earlier, which is that now core is in restrictive territory. Core PCE and headline CPI for the first time since 2019. A lot of progress on inflation. Core inflation was 4.8% in June from a year earlier, according to the CPI. Lowest year-on-year reading since October of 2021. We're seeing so many new softest since February, month over month. Yep. On a 3-month annualized basis, 4.1%, 4.6%. Everything is beneath Fed funds rate, right? Do they hike? Man, boy, if they don't hike, it's going to be insane if they do not hike in July. So that's going to be a big upside surprise. And we've just seen nothing but upside surprises. Ben Carlson, year-over-year CPI since last June. 9, 8, 8, 8, 7, 7, 6, 6, 6, 4, 4, 4. Now we're at just so you guys know, the real CPI was 2.97. They're saying 3% to estimate it, right? But it's really at 2.97. So all right, so what was that comment again? What do we have, or what were we looking at here? RKLB. Yeah, we'll look at RKLB, Rocket Labs, right? I'm pretty sure that's Rocket Labs. RKLB. Yep, Rocket Labs. Rocket Labs. All right, let's turn off the RSI. Take a look deeply on this. What are we seeing here? Rocket Labs. All right, so it did break the trend. All right. Bottomed around 375, starting to climb. So on the daily chart, it is in an exponential trend. Right, so if it gets above this trend, it's probably going to explode. But you need the overall market in your favor. You need a risk on the table, which we're getting because the dollar is starting to fall, yields, starting to come down a little bit. Rocket Labs is definitely a risk asset, though. A very risky company. 4-hour chart, it is holding that 4-hour moving average. So keep your eye on that 4-hour moving average for Rocket Labs. Maybe it stays in this trend and then it breaks out later or breaks down, who knows, but it is trending higher. That support is moving. It has a move. This is such a small cap. I'm pretty sure it's a small cap, or it's a smaller company, which means that it's going to move a little more exponential. It's the support. It's going to either make higher highs or lower lows in the trend. Let's see. Yeah, broke out. It's on fire. You're getting a pullback here in Rocket Labs. It's just very hard to, on a technical basis, there's not really a clear support here. It's moving. So maybe you get a pull into the 4-hour moving average, right? That would be your best bet. You get a pull into the 4-hour simple moving average, the 50-day 4-hour average. That'd probably be your best bet for Rocket Labs. But it's a tiny company. Well, if you guys want to see that, let me go ahead and dive in then to what is moving in the market right now. So I go to FinViz, look at my screener. We got a lot of trash companies moving though. I'm not looking at these top gainers, 100%, 15%. Those already moved, right? Go to my screener here. Oh, Rivian is moving again. Okay, we got Rivian. And then I can even look at it in charts. They should sponsor me. All right, so we can see in charts what's kind of moving on here. You know what? But even better, let's go to the 4-hour charts here. There we go. Go to the 4-hour chart and see what actually makes sense. Mara just vertical, nothing there. IWM is moving. We know Carvana is short squeezing. Rivian. Hey, Rivian might be setting up. Let's take a look at Rivian. If it's consolidating, yeah, it is starting to consolidate. Moving averages are moving up. So you do have Rivian on this 4-hour channel, at least starting to wedge. So now we got the wedge forming for Rivian. There you go. If you like it, if you like Rivian, there's your 4-hour wedge. And I want to switch over to my other chart and see what it looks like in the intraday. There's the pullback. Whoever shorted QQQs, good job. I don't have the applause right now, but good job. Qs need to come back. All right, so Rivian, I have it on that chart. I just want to see what it looks like on my other POS chart. It is starting to, yeah, it is starting to wedge a little bit. There's a gap at 25.50. That's what I wanted to see. So for Rivian, you want to see this price start to push above 25.50. Here's the next resistance for Rivian. Next resistance for Rivian. It's pretty close to that next resistance. It's going to be 28.29. $28.29 for he is a tiger. Meta dumping, is the whole market going to tank? Now the whole market in the short term probably, because it needs to pull back and find some support. Pretty sure there's no like breaking news or anything. Man, this bespoke stuff though, these dudes, man, they're firing it up. I love this page. I'm gonna start following them. I already follow them, but I'm gonna start reading more of the research. Raoul Pal. Let me see if there's any breaking market news. ECB trade BOC rate 9% BOC. Yeah, upward surprises, you get inflation move back up. Whatever. I don't think so. We are on pause. All right, let's see what our Paul. Oh, he's probably live right now. Oh, is this the bond positioning? Okay, this is interesting. CFTC aggregate net speculative position for U.S. Treasuries. Look, we have an all-time high U.S. short on Treasuries, so this is going to be good. The short, what is he saying? Standard deviation from the mean. The shorter people are on U.S. Treasuries, that means bond yields go up or the cost of capital goes up. So if they get squeezed, then basically you get the cost of capital or interest rates, the bond market, you get it totally come back down. Bonds go up. So hey, the economy is strong, so it doesn't mean on a fundamental basis that you should buy bonds, but the technical setup is they're so short. If they get squeezed, their positioning is off. Their positioning is very negative on bonds, so they could get squeezed and just move sideways. And here's what I mean by that. TLT, if they get squeezed, then TLT comes right back up. Right, look at TLT starting to curl. Also, this is the bond market. This is the 10-year long-term bonds. If they start to squeeze up, at least back to the top, you're going to get a relief in yields, and you're going to get the dollar collapse even further, and you're going to get risk assets go up even more, right? Like Rocket Labs, like ARK Invest. So this is a good setup. Wave 2 FOMO, you heard it here. Wave 2 FOMO. All right. So Rivian, we got Rivian setting up. Meta's already moving up a lot. DKNG, a lot of people betting on DKNG. Who's this? Small cap? Nah, I'm not interested. Coin with the pullback. Hey, Coin still looks pretty good. Who's this? 3x bull shares of energy. No, I'm not interested in that either. People are getting long, man. Sheesh, a lot of risk coming onto the table. I like Roku though. Definitely like Roku pulling in. But these stocks are in play today. That's why I'm looking at them. XLK. That really doesn't look bad. Is this equal weight? S&P equal weight starting to take off? Let me see what that looks like right now. Because if this is the case, RSP. Yep, S&P equal weight starting to move. We're getting some very bullish divergence. Man, this is a bull market. What is there to say? What is there to say? We're in a bull market. Any other things you guys want to look at? Gracias. Closed all options and futures. Nice, Mr. Hey, good job. Yeah, that was good, bro. That was a good pick there. I thought you were trying to short the Qs like some of these guys on TikTok. They're just trying to short the Qs for like the next 6 months. I was like, I don't know if you want to do that. I don't know if you want to get that crazy. You definitely don't want to be shorting the Qs when you don't want to be shorting the Qs when inflation comes out this good, because you just don't want to do that. You're gonna, and then all of a sudden you're just gonna start crying. I need a Stream Deck, man. I need this thing to work. This pisses me off because I have to do it by hand. It's not as funny. But anyways, yeah. Hey, good job on that trade. Equal weight is starting to break out. And for me personally, I just say, hey, you know what? This is really more evidence for Bitcoin to start to move. You know, people are going to jump into Bitcoin pretty soon. Ethereum, same thing. We're going to get that move in Ethereum. Ethereum moves weird too. It doesn't have the cleanest technicals, but it does like to break out of, it actually has vertical, like Bitcoin will be descending and then break out. ETH will ascend in an ascending channel and then break out. Kind of counter to what people think. Or well, to the average, to the industry average. All right, put that back on there. Still holding shorts from, dang, some old guy on TikTok still holding shorts from 4,000 to 4,200. That sucks. We're bullish. I know, we're bullish as all get out. Bro, where are you from, big man? Where are you from? Texas? That's what my mom's boyfriend says. He's from Texas. He's from a country place in Texas. Big man's coming. You must be Texan, huh? Yeah, we're bullish. All right, we've been bullish for a while. Check out the newsletter. You'll see why. There's so many reasons to be bullish. And you know, the funniest thing is, one of the biggest reasons is literally just that, forget all the macro stuff. Like, bro, people are going to get FOMO, period. They're going to get FOMO. Fund managers are going to get FOMO. They have to buy the market. They have to buy the market. Look at the history of a bear market. Once you exit a bear market, the reason it explodes is not because people are, linearly saying, well, I should add 10% risk because the market improved by 10%. No, it's like, oh, I don't know if I can say that on here. I'm just going to say, oh, shit, we need to lever up. Boom, they start levering up. So it's coming. It's coming. Yeah, we're gonna keep our eye on these 4-hour charts, because it looks like that's where we're at now. Gotta look at the 4-hour charts. Really waiting for this test to move. The only thing is, it's not that clear on YouTube. I can tell it's a little unclear on YouTube. That's okay. Hey, and look out for Tesla forming this triangle channel. I'm gonna switch this up because I want this to be a little more clear. I'm gonna make it a pure line, because it can break over this for sure. And I'm going to show you why. This looks exactly like it did in 2019, I believe. Right? You see that? Usually you want to see a dragon wedge. You want to see it pointing down, but it's pointing up. It's pointing down instead of pointing up. But if we zoom out, we saw that back here. Did the same thing. Let me see. Where was it? I want to say it was right here. Yo, what the heck? Oh, there they are. All right. So I want to say it was right here. That doesn't look the same, but basically, it kind of looks like this, right? It's not the best pattern, but it just keeps moving up. And then eventually you have earnings. This was earnings, and it just explodes. Next thing you know, you're on another trend. You're on another hyper trend. And then you fizzle out. We go, we went up a lot. And this was the release, I believe, the release of Model Y 2019. I guess it was after, the release of Model Y. But I've just seen Tesla's price action so much. And if that earnings report comes out and it's really the expectation of, the supercharger network taking market share, can anybody really survive? Can Uber and Lyft survive if this happens? Everybody else is gonna have to pay Tesla a subscription fee to run their supercharger network? And then full FSD, that's the big one. I've been waiting for this for 3 years, so I didn't know when it was gonna come out. But full self-driving, man, that is a big catalyst. That's a big catalyst. This is the 4-hour chart though. This old guy on TikTok holding. Yeah, there's a dude on TikTok too who's a crypto guy. I like him. I don't really know him, but he's pretty bullish. I mean, he's bearish on the market. And they're all eating their words right now, right? I'm not trying to push in nobody's face, but they just believe too much of the mainstream. The fear is getting to them, I think. The fear is really getting to them. And things are improving. Like GDP got revised up, right? Earnings getting revised up. Well, you get it here. You're gonna get the my outlook. I mean, I don't know everything. I could be wrong on a lot of stuff, but at least I'm gonna give you as much data as possible. That is not mainstream. Nova. Okay, so let's switch over let's get back to the charts. I want to hear what these guys are saying now. I want to hear what the CNBC guys are saying. Here's the inflation breakdown. We saw that. Commercial banks. Are they even talking about inflation? Oh gosh, Maxine Waters talking about ESG. Oh, I do have some videos. That's right. Oops. So yeah, Roku. Oh, there we go. Let's look at Roku really quick. Yeah, Roku in here. Yeah, Roku is pulling back to that previous support. So keep your eye on this. Make sure you guys keep your eye on Roku. Mine's like zoomed in or something. What's going on here? Oh, there we go. All right. Looks bearish, but look at that support right there. Previous zone. 74, 75. Well, the gap up was about here, so I guess that's where you want to put it. Fills the gap at 74 and then starts to move up again. Roku looking solid. Bonds are starting, Bukowski bonds are finally starting to pop. Yeah, those people are getting short squeezed. That's what we're looking at here. What Raoul Paul was pointing at is there's a short squeeze in the bond market. There's going to be a short squeeze. It's coming next. We saw the S&P squeeze. Now the shorts are going to squeeze. And that short squeeze, they might have all covered. Think about this. What they were basically doing, the short, they were very long U.S. Treasury yields, right? They were very young. They were very young. Can't talk. They were very long U.S. Treasury yields. And once the Treasury yields pushed higher and broke out, right? I got this highlighted because there was the dollar a dollar divergence here. So keep that in mind. As this broke out, the dollar started going risk on, even though it should be risk off. And so I think they covered. They might have covered at the highs. Now they're squeezing back down. So now you're getting a boost in TLT. The cool thing is that TLT didn't even drop as much as the bond market went up. Bonds went up pretty quick, and I think TLT held the bottom. Yeah, it did. It held the lows. So it never actually dropped out. So there should be some relief there. 2-year yields rolling over, 10-year, 5-year. What a setup. And the dollar just collapsing. This is a really good setup. So the Q's pulling back. Everybody's getting scared now. Oh my God, I told you it was a fake report. It's a fake out. Well, yeah, in the short term it is. But we just made a new high. Pulling back into the zone. SPX is still above that level. Market breadth is coming in. We already talked about that. Went over that. IWM. So many good things in the pipeline. Just stay long. Oh, you're long TMF. Yeah, you're long now QQQ. Oh, Mr. Always. Okay, hey, are you in the TikTok chat, Mr. Always? Do I know you? I might know you. Now you're long QQQ. That's what's up. Ken's, yeah, he was short. Well, he was short the Qs in the short term, and now he's long. So he just shorted the top. He wasn't like long-term short. He's not that stupid. Not that he's stupid, but you know. Can you evaluate Palantir for me? Yeah. We'll take a look at Palantir. Man, Palantir is ready to blow again to the upside. So Palantir is back above the support zone. It's basically headed for 20. I think it's headed for 20 now. I'm gonna go to the 4-hour chart, see what it looks like on the moving averages. We are getting, it just supported the 4-hour moving, the 50-day moving average on the 4-hour chart. Blow off top it is testing 16, 17 right now. So Palantir looks wild. One more pullback. Come on, Palantir. I always say that, but it's just a monster. It's pretty much a monster at this point. And I bet the earnings come out really good. Earnings August 9th. So Palantir above 17, it runs to 20. That's about as clear as day. It has some resistance at 1780, or you could say 18, but on the bigger chart, you know, it's pretty much 20. Oh, user, we got a jokester in the chat. I want some attention there. Technicals are funny. You can literally draw lines anywhere and make it look good. Yeah, you're actually right. You could just draw lines anywhere and make it look good. That is true. That's why you got to know what you're doing. And technicals are always if-then scenarios. It's not necessarily like this is going higher, this means this. You always gotta layer your technicals with the macro and with the fundamentals. Sometimes the technicals give you more insight. Sometimes the fundamentals do. Sometimes the macro does. Right now, the inflation report is probably the strongest thing on a year-over-year basis. So yeah, Norberto, Palantir over 17, FOMO. And the other thing about the technicals is everybody's trading it too. There's traders, like a lot of traders, so they're gonna get in at those levels. They're gonna trade those levels. You got hedge funds trading those levels. You got market makers trading those levels. So a lot of people get faked out, but those are blow off tops, or those are areas where momentum starts to step in and volume picks up. And a lot of volume picked up on the downside for Palantir when it got up to 17. That was a previous resistance. So, if technicals didn't matter, well, why is it that the previous support of Palantir at 17, which also turned into resistance, and this was 17 in May 2021. It turned into resistance January of 2022, and it also remained resistance a year later in 2023. So above 17, you get more momentum, probably shorts cover, and just a lot of people waiting to trade that breakout. So keep your mind on that. See what these ZM calls are looking like. Still negative. Any crypto news? Oh, what was it? What was the stuff? Oh, Aave. Aave is now using Chainlink. FYI, Aave is a lending platform, and they're coming out with a new program or some new stuff where they're going to actually be. Actually, I don't know how to explain it, but they are going to be using Chainlink for that, the dominant Oracle network. All right, I think it's about time that we get to hear what CNBC is saying. First, I'm gonna throw this on here. Okay, we're looking at Rivian, Roku. Hey, that hold of the PDC on Roku is gonna be key. I'm really thinking about taking it for a swing trade. Pulling right into 75.50. What is AMD doing? Rivian ran up. Dang, AMD got smashed at that 115 level. Oh, wow. Hey, more consolidation. Go chasing. Come right back to PDC. Q's breaking down. That's good. All right, there we go. We got some commentary. Oh, I like to hear the macro guys. Let's listen to these macro guys. So I do need to turn this sound off on the turn this music off, and then I'm going to share the stream. All right, we'll pause that. We're going to flip over here.
Hour. Stocks climbing on that cooler than expected CPI report, the lowest monthly core reading in nearly 2 years, and stocks are rallying on the back of that data with the S&P 500 and the NASDAQ both hitting 52-week highs. We'll debate the road ahead for the markets and what today's inflation read could mean for the Fed with the investment committee. Joining me for the hour, Jim Lebenthal, Liz Young, Joe Terranova, and Rob Sechan. But first, let's take a check of the markets very quickly. As we mentioned, the NASDAQ and the S&P hitting 52-week highs. The NASDAQ doing the best, up almost 0.75%. The S&P up over 0.5%. The Dow up almost 0.5%. But the big story here, the yield on the 10-year and actually all treasuries right now, we're seeing 3.85. Remember, just last week, we hit a high of 4.09. So a big move to the downside when it comes to yields. And I think that's really where we should start this conversation. This move to the downside of yields, this inflation read, how does it make you feel about the markets and the possibility of a second half rally?
It makes me feel good. This is obviously part of my thesis, as longtime viewers know, is that I've been saying that inflation has been coming down faster than expectations, and basically that the Fed's work is done. Now, they are likely to go again in July, another 25 basis points. Public service announcement here. The Fed person, or excuse me, the insider, if you will, from the journalistic community is Nick Timiraos at the Wall Street Journal. He's the one that the Fed speaks to if they want to change course. So for the next couple of weeks, we just got to follow what Nick Timiraos is reading in the Wall Street Journal. I don't particularly like bringing up a competing journalistic outlook on a CNBC show, but he's the one guy. If the Fed is going to change, they're going to let him know. But regardless of whether they do another or not, it seems likely that that's it, that's done. What that means for the markets is that the lows, the risk that we go back to the lows of October of last year seem to be very remote. I think they are vanishing. At the same time, let's respect, Frank, the fact that the stock market's up 17%. And let's leave aside the narrowness of the rally for a second. 17% in a little over 6 months is a lot. This market needs to consolidate. So I don't think this is the FOMO moment where everybody should be rushing in. I think this is a moment to just cool off, digest the gains that we've had, and let the economy, which is a lot stronger than people expect, continue to chug along as inflation continues to come down and the Fed hangs its hat up.
All right, so Jim's really focused on Nick Timiraos from the Wall Street Journal. By the way, friend of the show.
So Nick Timiraos is, like I said, the Wall Street Journal guy. His Twitter, they said that he actually saw the report beforehand and he signaled that the inflation report would be better than expected because he said, well, if the inflation numbers come out better than feared, he said this the day before, then that doesn't mean inflation's over yet, or, you know, things, the Fed is done hiking because of the base effects, which is true. So Nick Timiraos, if you want to follow him on Twitter, he's just basically giving signals, even though they're not like true. I don't want to say true signals. They're just kind of like, you have to interpret what he's doing. Right. Number two, I do agree with Jim Lebenthal when he says, you know, the market needs to digest a little bit, needs to consolidate. Maybe it doesn't, because we do have a PPI coming in tomorrow. So, and then we have earnings on Friday. So I think we do muddle around the highs, at least for the S&P. I think it just remains above the highs. Qs haven't broken out yet completely. So S&P will, you know, consolidate a little bit above the highs before it makes a move higher. And it needs to digest the PPI report and then the bank earnings to see if there's any banking risk. And then I think we move higher. So we might have some more consolidation, right? Depending on who it is we're looking at. Nick Timiraos, Tim Nicro, Tim Nicro, Nick Timiraos. Let me see, Nick Timiraos. Might spell his name wrong, but I'll find his name. So let's hear. I'll go look at his name real quick.
My show, Worldwide Exchange. I think a lot of other people are looking at 12 straight months of declines when it comes to headlines, CPI. Lejeune, how do you feel about the second half?
Well, look, the CPI print today was definitely a good thing, moving obviously in the right direction. And now we're sort of rolling off the high print of last June. So we've got that in the rearview mirror. I don't think that a hike in July is absolutely guaranteed. The market still thinks that we've got almost a 90% probability of that. I think there's a decent probability that they might be done, or that they might prolong the pause even further, because there has been good progress. And it's okay to be positive about that progress. Now, to Jim's point, are new lows in our future? I don't know the answer to that. Obviously, I think it would require some sort of confirmation that we are actually going to have a recession, or that there is going to be a contraction in the economy. And there continues to be data that conflicts that. So it's gotten ever muddier, and it continues to be muddy for those of us who are still expecting that an economic cycle does end in a recession. And as we are still in late cycle behavior, it's difficult for me to believe that we won't see one. But until we have confirmation of that, Jim's probably right. We're pretty far from those lows. We're far from October. And I think there's probably still room for a continued rally if we don't have bad news. But I do not see a lot of upside over the long term from these valuation levels.
Well, I know we were just showing the Fed funds future. If you look at the CME, still a more than 90% chance of a hike in July. Joe, I see you doing a lot of nodding. Do we have some consensus here?
Well, I think this is all about bond yields. And I think it's important to trail back the path that yields have taken. May 4th, you had a 365 on a 10-year. It subsequently rallied over 145 basis points to a 511 16-year high on July 6th. And now over the last 4 trading days, you've seen that yields pull back by 35 basis points. We're trading 473 right now. And I think yields are the story. Yields in the month of July have taken control of dictating where risk assets, including equities, are actually going to be pricing. So I think you look at the move in yields today as a reaction to a favorable CPI report, and you say to yourself, this is a needed ingredient in the formula which will complete 2023 being a very positive year for equities. In the near term, in the July, August, September timeframe over the next 90 days, I'm not sure where markets go. To Jimmy's point and to Liz's point, I think there's vulnerability that you could see a sideways or even a weak quarter. But what's important is that yields don't get too far away, okay? Yields pull back in reaction to inflation like they're doing now, and that sets you up nicely for the fourth quarter. And I think the fourth quarter is going to be a very strong one.
All right, so you have some questions about the
Yeah, so it's all going to be about earnings coming, our earnings starting to bottom. So if this continues, we get lower inflation. Inflation continues to decelerate. On top of that, which is the biggest dragon, growth remains flat or still expanding. That's a key driver. That's a tailwind. And then you also have earnings growth starting to bottom, or GDP also looking like it wants to bottom from the estimates point of view, meaning beating expectations. And that's positive. Bond yields coming down because, bond yields are coming down with the cost of capital coming down, the yields coming down, the Fed pausing. So interest rate risks start to disappear. And that's positive. And that also has the dollar starting to break down, which is the biggest story, really, other than inflation. The dollar is breaking down, but nobody realizes it. That's a big signal. That's a risk on signal. And that's a positive. So you have so many positives. The biggest negative is that oil is starting to break out, right? At least from phase one. Phase two, it's going to be ugly. Phase one, we'll still come back and retest 85, 83.50. And that'll keep inflation a little less collapsing. I don't even know what I'm saying here. That'll keep inflation from collapsing faster. That's it. But for the most part, shelter is going to push down inflation, so we should be good. So yeah, a lot of good stuff in the pipeline. I think we just go higher. Now, will every stock rise? No, not till QE actually gets turned back on. So you're looking for really good inflation report, really good earnings report, margin expansion, guidance, demand, all that stuff. And so there's going to be not few, but I call it the rolling recession narrative, or the only the best will survive, right? Survival of the fittest when it comes to earnings and stocks. It'll be a stock picker's market. Survival of the fittest is what we should be seeing coming up in this environment. But yeah, the macro is continuing to turn.
The current quarter. Rob Sechan, I'm going to come over to you. Your reaction to CPI. What does it make, and also the move in bond yields, how does that make you feel about this current quarter and also just the full year?
So when we look at it, the core services ex shelter has seen one of the biggest moderations that we've seen all year, and it clearly shows that the Fed has control, and we are on this golden path where you have disinflation and average weekly earnings strengthening. And so the consumer is regaining purchasing power, which certainly, and I know we're going to talk about earnings later, but it certainly creates the possibility, at least in the near term, for upside to earnings. And we'll talk about why that is. But when you look out into 24, you still see a market pricing in Fed cuts. I think it's too early to think about that. And the implications of that for valuations are something that you have to pay attention to. So in the very short run, technically we're well supported. We've moved quite a bit, and that's why you got to be careful. But not all parts of the market have moved. They're starting to wake up, and I think you can pay attention to those parts of the market. I mean, we like international right now.
Yes, they are starting to wake up, as in market breadth is coming back in. IWM turning back up, making a big, I don't know if it's a 52-week high, but it is turning up. Dow still chugging along at that line. So these are the three indexes, the Dow, DIA, right? The Dow Industrial is starting to move up. The IWM, or small caps, are starting to move up. And then the equal weight, S&P equal weighted, is also starting to move up. global breadth, the Mexican stock market, the German DAX stock market, the Japanese yen, not the Japanese yen. Well, it is moving against the dollar, but the Nikkei, right? The Japanese Nikkei is moving up. So we're getting breadth. It's starting to turn up. So there's market breadth. And we saw the advanced decline lines are picking up also. And what this guy said is core, which is key. Core X inflation is what all the bears have to focus on. All the bears are like, what about core X shelter? That is their last stand here. And core X shelter month over month came in low, 0.2, I believe. So a lot of progress here. It is a bull market. There's nothing taking us lower.
Starting to see a weak dollar trend, and that has historically been good for international stocks. So if we're just talking about the U.S. equity market, it's still top heavy. And you have to make sure that you don't overexpose yourself to that in the events that rates in 24 actually end up headed higher because inflation stays more persistent because of a strong consumer.
All right, so you're really banking on the strong consumer. I think we also have to keep in mind the consumer is also stretched pretty thin. Rob, I want to push back on one thing. When we look at the NASDAQ 100, we're talking about this, that you have to invest in more than just these big names. NASDAQ 100 still trading, I think, double digits below its 200-day moving average. Don't you still see more upside there potentially?
Of course, potentially, but let's realize how expensive it is relative to history. Now, if you were to look at an equal weighted NASDAQ, you'd see that that's up about 23% for the year, still significant, far under the market cap weighted NASDAQ. And, you know, while we're overweight tech, we're really letting some of our winners ride. But, you know, the last time we were on, we trimmed Microsoft. We're really focused on valuation. We're market weight on Apple. And so while we want to stay is being driven by AI enthusiasm, which hasn't found its way into earnings estimates yet. And so you're in this this land of information that is incomplete. And I would tell you, when you hear everybody at the gym talking about you own NVIDIA, right? I can tell you that concerns me. Okay,
well, Rob, you probably shouldn't take investment advice from your personal trainer.
Bus.
You probably shouldn't take investment advice from your personal trainer. Jim, I know you've been waiting to jump in on this.
You know, look, there's a lot in today's report, and we're all touching on various aspects. There's one.
Dan, that's funny how everybody owns NVIDIA. That's what he said, which is, you know, kind of a signal, a topping signal, but it still has a strong narrative. It's not like NVIDIA is going to roll over just because everybody owns it. If anything, it just keeps it where it's at and it consolidates. And then when people get bearish, it goes higher, they sell and they go up. But hey, we're back in a bull market. People are talking about stocks, you know, in their daily lives. They are talking about stocks. They're talking about crypto. Pretty soon they'll be talking about crypto too. But they are talking about stocks again. The market is hot. Consumers are pretty good. The consumer is strong, and inflation is coming down. That's the number one thing. Inflation is coming down. So that's what we have to look forward to is these earnings reports and how is guidance, right? Who's going to actually do better than expected?
Thing I want to mention, because I'm sure viewers out there, Frank, are saying, hey, what about the core, silly? That's what the Fed is focused on. And I'm thinking about something you said a minute ago, the consumer is stretched. Politely, no, the consumer is not. Headline CPI is 3% year over year. Now, the consumer is looking at the price of whatever, a haircut, and saying, oh, my God, it's $45 today. Don't laugh, Liz. It's $45 today, and it was $35 last year. That's right. It raised in a year, but it's not continuing to raise. 3% is the headline number. And I know that the Fed has been focused on the core and the super core and all this sort of stuff. What we all need to consider is if the headline CPI continues to come down, our friend of the show, Tom Lee, thinks it's going to have a two-handle next month. If it's a two-handle on the headline and the Fed is still trying to break the labor market, they are going to run into a significant political and societal problem, keeping people out of work when inflation is broken. So just pay attention to that.
Jim,
I don't think core matters.
To me, Jimmy, can I
give us
push
1
on
second
you for a second there?
Joe, wait, Rob. Joe's been waiting patiently. We're going to get one more point. We're
Okay, go ahead.
We're going to keep this whole train going, I promise. Joe, very quick.
A couple of things to keep in mind. First of all, there's obviously extreme concentration right now with the top 10 stocks leading the performance in 2023. And we all know that's coming from the NASDAQ. On July 24th, the rebalance, this special rebalance that's occurring, is specifically in its attempt going to remove some of that concentration. Keep that in mind. In addition to that, we're not talking about what has been the catalyst on September 28th, last fall. What happened to the US dollar? It peaked, and it's down subsequent to that nearly 13%. After that peak, Frank, the bottom for the move in equities was placed. So it's been very important. It's been a very positive contributor, and it's been a condition that's been favorable. And you're not going to hear so much corporations talking about the currency headwind because you have the US dollar at a 14-month low.
All right. Now it's time to bring in our
Exactly. So the dollar falling creates more of a tailwind and an extra tailwind because when the dollar falls, then really global earnings go up for multinational companies, and also the dollar falling kind of just boosts everything else because everything's priced in dollars. So a lot of tailwinds here. The market is very bullish. Hey, if anybody finds somebody who wants to debate me on TikTok or whatever, let me know, or let them know, because this is more bullish than I even thought it would be. The dollar's breaking down before I thought it would actually happen. Yields are in the way a little bit, and the question is, will the Fed actually hike in the next meeting? And earnings are going to be a big key driver also. So a lot of stuff in the pipeline. Stay tuned in the macro report, because I'm going to put all the data on there that I see. Anyways, we went over. Oh, there's Ed Yardeni. Let's hear Ed Yardeni. He says that baby boomers have trillions of dollars to spend. I always keep up with his research. He says the baby boomers have a lot of money to spend. The economy is going nowhere. So when you think about the savings and loan crisis back in 91, there wasn't a whole lot of money in there wasn't a whole lot of because a lot of people are comparing the credit card delinquencies to the 90s bear market, but there's big key differences. And a part of that is that the most money is held by the baby boomers, and they're not actually, they're not defaulting. It is the younger people, the millennials, my age or even younger, who are defaulting on their credit cards, or defaulting on, what is it? Auto loans. So therefore, this is not a big driver, not as big of a driver as people think. Let's hear what Ed Yardeni says, and then we'll hang it up from here.
Like this to talk inflation and the impact on the market. How are you today?
I'm fine, thank you.
All right, big question here. What does the CPI read mean for the economy, and what does it mean for the markets? Obviously, two separate things.
Well, I think certainly with the benefit of hindsight, it seems that inflation has turned out to be somewhat more persistent in some areas and transitory in other areas. So it hasn't been just across the board persistence. In fact, we've seen a very transitory situation in the goods markets. Goods inflation has come down rather dramatically, down basically to zero. Now I think we're starting to see disinflation in the services side, particularly the rent component, which is 40% of the CPI. So I think that inflation continues to moderate. I think some of the inflation we've had was related to the pandemic, the shocks of the pandemic, and they're dissipating. And as we move forward here, I think inflation concerns will abate as an impediment to a continuation of economic growth. I mean, we did have a mini recession back there in 2020. I think we're still in an economic expansion. I think we've been in a rolling recession. If we've been in a recession at all, it's been a rolling one, and now I think we're in a rolling expansion.
All right, so Ed, you're saying inflation concerns abate. Is that for the market? Is that for the consumer? Is that for the Fed?
Okay, I know who you're talking about. Johnny Surzidi. Yeah, that's the dude I responded to yesterday. I know he's been very bearish. I didn't respond to him. I was just on YouTube. So maybe I'll make a video about it. We'll see how it goes. Either way, yeah, I think he's wrong. And I think we're going higher from here.
We had several Fed speakers out today, Kashkari, Barkin, both of them saying post-CPI, inflation is still too high. Are you listening to those hawkish voices? Is there another Fed speaker that you're listening to for insight?
Well, now they seem to sort of have a a split personality when it comes to what they're doing. On the one hand, when they get together as a committee and put out the projections of the summary of economic projections, where they put in their forecasts, they've been really forecasting for some time that they would get the Fed funds rate up to 5.5%. And that would be restrictive enough that if they left it there, that inflation would come down. So I guess they don't want to use the expression mission accomplished because that's a jinx. But I think to a large extent, they have achieved their mission, which was to get the Fed funds rate up to a restrictive level and keep it there. I'm not in the camp that thinks the Fed funds rate's coming down anytime soon. I think they've done a pretty good job. And I know it's usually a jinx as well to side with the Fed, but I think this time the Fed may actually have gotten it right.
You know, I think a lot of people say don't fight the Fed. Ed, Joe Terranova has a question for you.
Ed, good to see you. So a lot of times, you know, when you think about personal goals, you say to yourself, I want to do 20 more push-ups over the next year. Well, the first.
All right, so yeah, I'm looking at this guy. Maybe he has YouTube. I don't know. I see he's on TikTok. He usually has a post. I'm looking at his Twitter right now. Let's go over his Twitter. I'll show you guys before I clock out of here what his Twitter looks like. Maybe we'll set that up. But oh shoot. Here we go. This is his Twitter. Let's kind of go over what he's saying here. All right, so this guy has, let me remove this, hide this comment. He's bearish on the market. Let's see. He said this chart helped a lot of institutions get out of, dang, he's really bearish. He's be tweeting out all day. This chart helped a lot of institutions get out of the market near the November 2021 top. It's important to understand the market's risk tolerance by comparing year-over-year change in high yield spreads with the S&P. As you can see, there's an opposite correlation. So high yield spreads, what are we looking at here? S&P 500 high yield spreads. High yield spreads are coming down, S&P going up. So I don't even know what he's pointing out here with high yield spreads exactly. I don't even think that's really something to correlate. Oh, he has it marked on here. As you can see, there's an opposite correlation. Above zero, investors are risk off and uncertain. Above zero. Below zero, investors are risk on and complacent. Looking for a trend reversal year-over-year change as it approaches zero from a negative key. So what is he pointing out here? Because this is basically, I mean, this is basically like triple B spreads and they are rolling over. So this is bullish. What is he talking about? Below zero, investors are risk on. It is below. Wait, where's below zero? Yeah, we're below zero. So what is he? I don't even know what he's pointing out here. Sorry, my camera went out. YouTube, that's fine. Let me just make this full screen. All right, so I don't know what he's pointing out here because we are below zero. And what? We are below zero, bro. Somebody signal this guy. Let's go after this guy. No, I'm just kidding. Below zero, investors are risk on and complacent. And duh. Yeah, and they are risk on. Okay. Looking forward to a trend reversal in the year over year. Oh, so he's looking forward to a trend reversal. I was gonna say this is bullish, bro. This is extremely bullish, which is triple B spreads. It's the same thing, meaning people are taking risk and credit. So he's showing a bullish chart, bro. That's not bearish. That's bullish. He's anticipating the reversal. So the question is, what makes the triple B spreads reverse? It's going to have to be people piling into bonds and out of corporate debt because there's a credit risk. But we know the Fed steps in when there is credit risk. So he says, what comes before a hard landing? A soft landing. Okay, fair enough. I mean, it's just a quick thing. Now let's look at what he says here. He says deflation in energy components of CPI continue to be sole contributor to the overall disinflation. The concern I have is when we start to see other lagging components, food, shelter, services start to enter disinflation and worse, deflation. So now he's not really saying that there's inflation. I think he's saying that this signals collapse. These components make up more of what consumers feel in their wallets each day and what producers see on their bottom lines. Well, if we're talking about the stock market doesn't it doesn't really care exactly. The stock market cares about its own valuation. So energy, gasoline, fuel, oil, deflation. I think we are in deflation. I'll agree with him here. So some dude said, what would be negative effects of deflation on food prices? Would be bonuses afforded, blah, blah, blah. How good is the drop price? You can't even buy it. You're only thinking about it from the consumer's perspective. In a deflation environment, corporate margins go negative. People get fired, profitability tanks, and it creates a landslide of issues. Well, fortunately, if we do go in deflation, Johnny Sursdy, if we go into deflation, which we are headed for, very quickly, what happens is bond yields fall. So the cost of capital goes down. So it's basically a non-event. Cost of capital goes down at the same time. Plus, the Fed always can step in if growth really starts to collapse. Deflation is actually worse than inflation, by the way. And so if we do get inflation, 450 PPI tomorrow, 450, what does that mean? If we do get deflation, then the Fed can step in. So, I mean, I don't know. Here's your indefinable consumer weekly same-store sales entered. Okay, yeah. Year-over-year retail sales are falling, but guess what? Most of the strength is in the services sector. Ever since the debt ceiling bill was passed by SPY, has had honey badger attitude towards. Oh, I love this one. He's talking about liquidity here, and he's wrong. He's completely wrong. SPY has had a honey badger attitude towards central bank liquidity thanks to balance sheet magic tricks. The TGA refill can be temporarily offset by RRP liquidity. Not sure how long that can last given persistent inflation. Man, he's just purely bearish. But it definitely helped fuel this euphoric AI rally, 100%. So he is pointing out here that the RRP refill has actually not been a negative event, but he's not really saying it's negative. He's just saying how long could that keep up? Well, there's $2 trillion, Johnny. There's $2 trillion in the RRP, so it can keep up for a while. Either way, that's not really negative. I'm just trying to go through this guy's tweets, see if he has anything solid. Looks like he knows what he's talking about. He's just betting things roll over. Some time. Let's see what else does he have here. Is this guy a real crypto bull? The headlines are right in line with majority sentiment. What can go wrong? Not exactly, Johnny. People are still more short than anything. Bullish versus bearish sentiment, AII. Now, I know he showed this in a video, bullish versus bearish. This was the AII bullish versus bearish sentiment. What was this in the last, since 2020? The difference here for the bullish sentiment is that we're coming out of a bear market, Johnny. So yeah, I'd love to talk to him because there's a big difference between when people are bullish coming out of that's actually a positive. That's actually positive. When you're bullish and things are at the top, that's where you worry because the downside is much bigger. But if you're bullish at the bottom, I mean, you're at the bottom, right? The macro is starting to improve. Inflation is coming down. We just got that today. The economy is holding on. Services are up. Manufacturing is showing, different that it could be bottoming. Man, I got to talk to this guy. I'm gonna have to talk to this guy on TikTok, see if he wants to debate bearish or bullish. All right, cool. Well, I'll see if I get a hold of him and see if we could do a debate. That'd be cool. Yeah, he's bullish on crypto, but he wants it to go to 18. Yeah. It seems like he just wants prices to come down. A lot of people. He seems smart. I think he just literally has the bias that things are going lower. Good afternoon, William. 450 PPI tomorrow. But anyways, yeah, no, it sounds like a smart guy. We're both bullish on crypto. Hey, I'm a crypto macro analyst, same thing. He's out of Miami, Florida. Cool. Guess we'll see what happens. Also, you got, Joe Biden pumping liquidity, so this should be good. All right, cool. Well, I think that does it for the show today. We'll be back again tomorrow for PPI. If you have the newsletter, look out for some more information. This will all be packed into the release on Saturday morning. Either way, all the inflation stuff that I have. So I think we're gonna end it there. Okay, we'll end it there. Oh shoot, you guys can't even see me. I turned the webcam off. No wonder. Let's get a good goodbye here. Oh shoot. All right, cool. So those of you on YouTube, the camera shut off again. I got to get a better battery. Anyways, thank you guys for joining. Thank you guys for joining. Let me get this exit music. I appreciate you guys joining. You two on TikTok. I'll be back in the morning tomorrow. I'm gonna try to get a hold of this guy Nick. See if he wants to, or not Nick Timrose. I want to call him Nick Timrose. Whatever his name is. See if he wants to debate on TikTok. That'd be pretty good content. And yeah. Anyways, you guys stay blessed. If you have any questions, let me know. Send me a message, and I'll be back in the morning tomorrow, 10 a.m. Eastern time. We'll go over PPI, and if anything new comes out, we'll let you know. Other than that, catch you guys later. Thanks for joining today again. Be blessed.